Cryptocurrency and everything that comes along with it is regularly marketed as safe because everything is logged on the blockchain. But due to its anonymous nature, when a crime does occur, it's almost impossible to trace, and criminals have been cashing in recently with a huge first quarter of 2022. Today, we're discussing some of the biggest cryptocurrency heists of 2022 so far, so don't go anywhere. First up, it's the biggest one so far, the Ronin heist. When someone steals between $500 and $600 million, it's safe to say it's a pretty big deal, and the blockchain project Ronin suffered that exact grim fate earlier this year as hackers breached their system. The crime is currently one of the largest crypto heists ever and saw 173,600 Ether tokens commandeered, as well as 25.5 million USD coin tokens. Thanks to ever-changing exchange rates, no one knows exactly how much was stolen, but it was somewhere in the aforementioned range. Some have suggested that this makes it the second biggest crypto heist of all time, and the prime suspect is none other than Kim Jong-un's North Korea. Ronin powers the online game Axie Infinity and is the biggest collection of NFTs around, and the company revealed after the heist that the perpetrator had stolen private keys to pull off the crime. The company said after the hack, "We are working directly with various government agencies to ensure the criminals get brought to justice," it said, adding that it was discussing with Axie Infinity how to ensure no users' funds were lost. Good luck with that if it is found out to be North Korea. However, it was revealed that most of the funds were still sitting in the hacker's wallet shortly after the heist, which gave people hope it would be returned for a small fee. Were you guys affected by the Ronin heist? Let us know below. Next up, it's Fei Protocol and Rari Capital. Stay tuned. Back in April, DeFi security firm BlockSec revealed that Fei Protocol and Rari Capital had been the victims of an $80 million security breach. The company alerted users that Fei Protocol and Rari Capital had been exposed to an exploit of streams connected to a decentralized finance protocols. Shortly after, Fei Protocol confirmed the attack and for a short period suspended all borrowing functions. They even offered a $10 million reward to the hacker to return the funds. Wow. Fei Protocol uses PCV to manage its stablecoin, which is pegged to the USD, but Rari Capital is a little different as it is a permissionless lending protocol. The two companies merged back in 2021 in a bid to further bootstrap liquidity for fuse pools. The hacker is believed to have stolen assets in wrapped Ether, but it is assumed that given the silence around the hacker, they will not be returning the funds. It's also thought that the funds have begun being laundered through Tornado Cash, which is insane given the fact that we know where they are and how they're being cleaned, but we don't know who is behind it. Last year, crypto heists totaled more than $1 billion, and so far this year, we are well above 50% of that, given the Ronin heist, which has led to suggestions that the industry needs to be regulated. What do you guys think? Back in February, web-based blockchain bridge Wormhole suffered a massive breach, losing 120,000 Ethereum, which totaled somewhere in the neighborhood of $314 million. However, shortly after the attack, the bridge company was reported to have been contacted by the attacker to negotiate. The fourth largest crypto heist of all time, the attacker exploited a mint function on the Solana side of the Wormhole bridge to create 120,000 wrapped Ethereum for themselves, then used these minted tokens to claim ETH that was held on the Ethereum side of the bridge. According to blockchain security company Certic, Wormhole then reached out to the attacker, saying, "We noticed you were able to exploit the Solana VAA verification and mint tokens. We'd like to offer you a white hat agreement and present you with a bug bounty of $10 million for exploit details and return the WETH you've minted. You can reach out to us at contact@certus.one." But it was revealed that a mystery company then bailed out Wormhole, which prompted a ton of conspiracy theories online. Once the dust had settled, it was announced that the attacker had gotten away with 93,730 ETH, 432,663 SOL, and $4.14 million in USD. Not a bad day's work. Were you affected by the Wormhole breach? Let us know below. Qubit is up next. The year got off to a worrying start back in January when Qubit Finance was raided for $80 million. Attackers made off with 206,809 Binance coins through the firm's Qbridge deposit function, which at the time was the 7th largest DeFi hack of all time. Similar to Wormhole, the Qbridge Bridge protocol functions as a bridge to swap tokens between the blockchains. It is thought that the culprit exploited an error in Qubit Finance's code, inserting their own malicious code to withdraw BSC tokens without depositing any ETH. And like many other firms which are subject to hacks, Qubit instantly recognized what was happening and reached out to the attacker to try and retrieve their lost tokens. And trying to play on the attacker's moral conscience, good one, Qubit said, "The exploit and loss of funds have a profound effect on thousands of real people." Qubit declined to comment if the tactic was successful or not, but they did disable their account management features while trying to get to the bottom of what had happened. Shortly after, they said, "We are continuing to investigate and are in communications with Binance. Further updates and a full report will be shared as they become available. And unfortunately, until a solution is offered, which means that hackers won't have access to anonymity, this will keep happening as there is zero incentive to give back $80 million just to make $10 million. What is your solution to this problem?" Next up, we have Beanstalk. Stay tuned. April saw crypto company Beanstalk relieved of around $180 million worth of their reserves. An attacker used a hostile takeover to use borrowed money to quickly acquire voting rights, which allowed the transfer of the money. And the way this one went down raised new concerns over how the industry is completely unregulated. The firm offers Beans coins, which were intended to have a value of $1 each. It worked similar to the way a traditional bank would have, letting people who use the currency, bean farmers, make deposits and using their savings to try and make sure the beans stayed around the $1 mark. But disaster struck when Beanstalk's entire silo was emptied after the attacker acquired voting rights after depositing borrowed money. The attacker borrowed $80 million in crypto and then deposited it directly into the company's silo, immediately gaining enough voting rights to okay any proposal. Wow, how is it that easy? Of course, they simply voted to transfer the funds, then returned the voting rights and left with their cash. They also quickly repaid the loan, which was nice of them. Blockchain expert David Gerard said, "It's like a very hostile corporate raid funded by junk bonds, except it was over in 10 seconds. In regulated markets, we have laws and regulations on how you can take over a company and drain it, but it's not clear that this action was illegal. Even the project concedes that the raider acted according to the rules that Beanstalk set out. Crazy." And finally, it's Casio, one of the smaller hacks on today's list, which will be of little comfort to the guys over at Casio. This one saw around $52 million drained from the company. The attacker made a fake Saber swap.arrow account, but the company failed to validate the mint field, allowing the hacker to create fake tokens, which let them deposit worthless collateral. The platform needs users to deposit collateral to mint its tokens. The other part of the attack saw the hacker create a fake bank, which you would think would be easy to check, which allowed them to pass the checks, just not the check to see if the bank actually existed. The fake bank was then allowed to mint real cash tokens, which seems absolutely insane. The whole attack was made possible by missing validation code, which could have been detected by a smart contract audit. But, of course, the project is unaudited, which means the vulnerability was sniffed out by the attacker and then exploited. Those who are not into cryptocurrency cannot quite believe that an industry which is capable of generating this sort of wealth can appear to be so wide open to attack from hackers. If the industry wants to be taken seriously by traditionalists, they may want to look into regulating it and inserting checks, which means that this sort of thing cannot happen. What do you guys make of all of this? Let us know of your thoughts below. As always, thanks for stopping by today, and remember to join us again next time when we will be discussing all sorts of different topics. Why not do us a solid by liking and sharing today's video, whilst also subscribing to our channel so you don't miss out on more great content going forward. Bye guys!